Hi, I'm Gary from Westwood Estate Planning. Now, have you ever felt frustrated thinking about inheritance tax, wondering why you might pay tax on money you've already earned and been taxed on? Perhaps you just want a clear and straightforward answer about how it genuinely works in the UK. In this video, I'm going to cut through the confusion. I'll explain the fundamentals of inheritance tax here in the UK and demystify who it truly affects. By the end, you'll gain a much better understanding, and you'll see why a calm and informed approach brings genuine peace of mind. So let's get straight to it. Inheritance tax, or IHT, is essentially a tax. It's on the value of a person's estate. Now that's all of their property, money, and possessions. This tax applies when a person dies. Now, I know what many of you might be thinking. I've already paid tax on this money when I earned it. So now again? And it's a valid and common frustration, but it's important to understand that IHT is a different kind of tax. It's a death duty, and it's applied to the transfer of wealth from one generation to the next. So not an income tax or a capital gains tax. And with recent changes, like how unused pension funds are now going to be considered for inheritance tax purposes from April 2027, is bringing more and more regular people into its scope. It's a complex area, but grasping the basics is your first step to feeling in control. So, who does IHT actually affect? Many believe it's only for the super wealthy, but that's not always the case. In the UK, everyone has an inheritance tax threshold, known as the Nil-Rate band, or NRB, and that's currently sitting at £325,000. So this means the first £325,000 of your estate is generally tax-free. However, with rising property values and the inclusion of assets like pensions, more families now find their estates potentially liable for IHT. Then there's the idea that inheritance tax is an optional tax. Now, this isn't quite right, and it can be a dangerous misconception. It's optional in the sense that informed planning can significantly reduce or even eliminate your liability. But if you ignore it, the tax is due at 40%. This applies to everything above your available nil-rate band. It's about making proactive choices to protect your family's future, not about hoping it simply goes away. Ultimately, your main goal is likely to preserve the wealth that you've built for your children and your loved one. And this is where a thorough and empathetic approach truly helps. At Westwood Estate Planning, we don't jump straight to complex strategies. We start by truly listening to your concerns and getting a complete picture of your unique situation. We start with a comprehensive estate valuation. This helps us understand what you have. We then carefully consider all of your options. This includes simple ones like spending or gifting over time. And only then, if appropriate, do we discuss more advanced planning strategies. Our focus is on providing you with a solid understanding, a genuine peace of mind. And we believe by taking that time to properly assess your circumstances and explore every avenue, you can feel confident that you're making the best decisions for your family's future, avoiding unnecessary tax burdens and ensuring that your legacy is protected. So if you seek clear, empathetic guidance on your inheritance tax position and want to ensure your wealth is protected for your loved ones, please click the link in the description below. Book your free, no obligation 15-minute chat. We're here to help you understand your options and find the right path forward. So thank you very much for watching. I've been Gary from Westwood Estate Planning, helping you protect your future and your loved ones. And I'll see you on the next video. Bye for now.